Hey everyone, this is Sime, your crypto CPA from the Lone Star State here at Akib CPA and also at Chainblock Financial. Do you have real estate? Do you have real estate properties that you've been looking to sell or you've been wanting to sell and you are sitting at a huge capital gain? At the same time, you have cryptocurrency, and let's say you have had this cryptocurrency for a while and you've been amassing capital losses with some tax strategies from your CPA, an informed CPA here in the US, who's been telling you to use tax loss harvesting to really amass those losses so we can use them to offset capital gains. So let me tell you today all about this because we do this a lot with our clients. Why? Because so many of us here in America have a long-term rental. We have a secondary property that we have Airbnb on it. It could be a short-term one as well. And we're gonna end up getting a capital gain on this property. I have clients that I can tell you just a case that I'm working on today, where this particular client sold their property for 2.2 million, but they have a capital gain of 700,000, ladies and gentlemen. And we've been working with this particular client for the last two years in amassing losses. But again, they've been our client for the last 4 years. But as far as amassing those losses, because we were anticipating selling this property, so we have, by using tax loss harvesting and other crypto strategies, we have 890,000 of capital losses that we can use to completely offset this real estate 700,000 capital gain. So on this screen, you're seeing, and I've already gone ahead and given you this answer. Can you net your capital losses and gains from real estate against crypto? Can you? Yes, you can. And you can do that for equities too. So cryptocurrency right now, you guys know that we don't have that 30-day wash sale rule. So if you can get with your CPA and make sure that they can really hone in and give you a tax strategy around this, you're not going to be paying taxes for the next few years on cryptocurrency equities or on your real estate transactions, anything that gives you a capital gain. Why? Because we can use that tax loss harvesting so beautifully, and offset. So yes, you can. You can offset real estate capital gains against real estate or against crypto capital losses, against also equities capital losses. Why? Because they're capital gains and losses. They all go on your form Schedule D. And per the IRS, the cryptocurrency, the very first notice that came out was in 2014, which is 2014-21. You should check this out. This is considered as a property. And in the properties framework, property has such an old framework. We have fit a brand new asset class into this old framework. So ladies and gentlemen, let's use the tax code for your advantage. Yes, you can offset real estate gains against crypto losses. So if you have crypto losses and you've been looking to sell a property and you have capital gains, you can time this so perfectly well, just like I showed you in this example of 700,000 capital gains that are completely gone from this real estate transaction. Why? Because we had 800 to 900,000 of capital losses. But again, that was part of a tax strategy. This is not something that we just came out in the middle of thin air and just no. We've been working with this client for 2 years on this very particular strategy. And yes, it works. So again, get with an amazing crypto CPA in your state, in your locality. If you don't have one, contact us immediately and let us show you some amazing tax strategies. We've been approached by so many folks all across the US that really just focus in. They have real estate and then they have crypto. They have lots of crypto. So let us help you craft the strategy. Let's make sure that you don't have to pay taxes on those capital gains. You can time the sale properly. At the same time, you can amass huge tons of losses from tax loss harvesting and still hold on to the same quantity of your tokens. So let's do that, ladies and gentlemen, and let's make sure you have a healthy 2025 and 2026 and make sure your portfolio is good. It's time that we use the tax code for our advantage. The Trump administration has opened this up so widely, and now crypto is mainstream. So most likely, Either you've already had real estate in your portfolio and now you're amassing crypto, but there's a tax strategy around here. So let's do this and let's save you some money. Thank you so much. This is Syme, your crypto CPA from the Lone Star State, here at Occupy CPA and also at Chainblock Financial. Thank you.